So oil had its biggest price spike in 3 decades. Last night, the futures contracts for oil just went absolutely crazy. There was a lot of volatility, but they went limit up. Just insane amounts of price rising in the oil contracts. Zero Hedge covered this late last night. The oil price exploded 20% higher, the biggest jump on record. The algos were confused. There was actually, in a very short amount of time, the high frequency trading algorithms were going up and down, up and down, up and down. Most people didn't see it on the chart. It happened so quickly. Zero Hedge has it in the article. I'll attach a link to it if you want to take a look at the microseconds when it was debating whether, with Trump releasing the Strategic Petroleum Reserve, weighing that versus how so much of the Saudi oil production, apparently I just heard on one of the news stations that this was the largest oil production disruption ever. I'm not sure if that's true, but I heard some talking head on the news say that it was. I would have to check to verify that. So the oil futures went up like crazy, 19%, 19.5% in the Brent crude increase on the oil futures, and the regular oil price today is up, closing at WTI is up to $61.88 from the low 50s. I think it was like around 54 at the end of last week. So it's up $7.03 a barrel. So it's up almost 13% at $12.82. Brent crude is up 13%, 13.04%. It is up $7.85 a barrel. This is not... It was very predictable that there was going to be a pop in oil. The question was how much. Some people said $5. Some people said $10. My friend Robert Rapier, I worked with him. I worked with him for around a year at Investing Daily, working on oil projects and paid in oil newsletters and MLP newsletters and other research for him. He wrote an article over the weekend. He said he normally doesn't write articles over the weekend. He has a Forbes article talking about how the attacks in Saudi Arabia are a recipe for $100 oil. He says, over the years, I've often been asked, I'll read the article really quick. Over the years, I've often been asked about scenarios that could rapidly drive oil prices higher. My response is always that the worst case scenario is an incident that takes a large amount of oil production offline in Saudi Arabia. Why Saudi Arabia? After all, the US, Russia, and Saudi Arabia are the world's leading oil producers, with each topping 10 million barrels per day in 2018. The difference is that production in the US and Russia is diversified across numerous producers and across a much larger geographical area. Saudi Arabia's production is from a single entity, Saudi Aramco. Further, Saudi Arabia moves and transports a large fraction of the world's production through relatively small geographical areas. That makes it extremely vulnerable to attack. Those attacks happened early Saturday when 10 drones attacked one of Saudi Arabia's largest oil fields and the world's biggest crude processing facility at Abqaiq. Hopefully I got that pronunciation halfway decent. A total of 5.7 million barrels per day of production was reportedly offline, which represents more than 5% of the world's oil production. So update on that. Let me switch from that article really quick. So oilprice.com, which is a really good free resource for getting research on the oil market. They have an article with an update on here saying that Aramco thinks that they could get 1/3 of the disrupted oil production back online today or either today or tomorrow, hopefully by the end of this week. However, the getting all the production back online, there's articles from a lot of analysts who are looking, whether it's Zero Hedge articles with satellite images, going through the damage, or other experts saying that it could take many weeks, if not months, to get the oil production back online. But in my opinion, this oil production is the equivalent for the U.S. shale oil producers sitting in the executioner's chair waiting to get the needle in their arm or get the electric chair, and then all of a sudden the phone rings and it's the governor willing to hear their appeal and they get another 6 months or 12 months. So the shale oil producers were in dire straits. The stock charts were bad. The earnings were bad. The outlook for oil was doom and gloom with the global economy. It was looking like a big bear market, and this is a blessing for the shale oil producers. We'll see if they raise capital. We'll see if they hedge. If I was a shale oil producer and I was running a company like that, I would be hedging a good amount of my production at these prices. Okay, so let me read some of the stock price for the oil companies. So we have OIH, which is the oil services, the Van Eck Vectors Oil Service ETF. That's up almost 9% at 8.5%. It's up. Let me look at some others. Oh, Transocean, which was in dire straits. Remember, I was reading some of those articles, and things looked dire for Transocean. Transocean, which had a large short interest in it, must have been a short squeeze. Transocean is up almost 14% today in one day. It's one of its biggest moves ever, probably. 14%, 13.61%, almost a 14% move in one day. Schlumberger, another company in trouble. The oil service company, that's up over 5% today. So the oil companies are getting a nice rally here. There was people who are short oil, people are covering, there's a short squeeze, and we don't know how long it's going to take the Saudis to get that oil production back online. The estimates are probably months from now. So I think this is benefiting Shale. Shale was in a lot of trouble prior to these attacks on Saudi facilities. The Chinese may not benefit from this because China imports a lot of oil from Saudi Arabia. So the U.S. doesn't import at nearly as much oil from Saudi Arabia as it used to. China imports most of its oil from Iran, Saudi Arabia, and Venezuela. And I could read more of the Robert Rapier article, but I'll attach a link in the information and description section. But we could have an oil rally lasting for a while. If I was running a shale oil company, I would be hedging my oil at these levels to make sure I have higher operating cash flow. I'd be hedging out for at least a year. At least, probably 2. I would be hedging my oil. And then I would be raising capital if I could. So the shale oil companies are going to be beneficiaries of this. I have no idea who really did this, guys. But this could escalate. Because remember what Trump said with his comments earlier with the tweets. And then today he's backing off them a little bit. What do I think of Africa oil? I haven't looked at them in a while. Africa oil did have some good wells in other African countries, but it is very risky in some of those. Because oil is so much of the government revenues. Oh, thank you, R.N. Rousseau. I appreciate it. Some other troll didn't think so. He just said that I read articles and I comment, and that's all I do, and I'm useless. So he just went bye-bye. Remember, at a certain price, if we get to triple-digit oil, it will act as a tax on the global economy and will hurt those car companies. So General Motors, Ford are already having problems. Ford just got their bonds downgraded to junk, which means that they're having operational problems. And General Motors just has a big United Auto Workers strike. And the United Auto Workers strike could not come at a worse time for Ford, especially if oil prices are going to rise now. The pictures show highly precise attacks in same spots on 9 of 9 gas domes. Very sophisticated attack. Yeah, I mean, they have the technologies available to do things like that. A lot of governments have drones now. So it's not like the U.S. is the only one with drones anymore. Remember that the U.S. stupidly, I think, crashed drones, right? And Iran was showing them on their state-run media. The U.S. lost drones. So Iran either copied the schematics of the drones. This was, I don't know, 6 or 7 years ago. How will this affect gold and silver? Gold and silver stocks are up. Slightly. Some of them are up slightly. Seadrill, which was another company which was close to bankruptcy, Seadrill is up almost 7% today, 6.63. Some of the gold and silver stocks are up 2%, 3%. Osisko Gold Royalty is up 3% today. So some of them are popping and some of them didn't do very much. Franco-Nevada is only up 1%. A lot of the oil indexes are up substantially. Let me read some of them for you. Let's see here. I have them in my watch list. Okay, so XEX, Xavier, Eric, Sam, is the Spider S&P Oil and Gas Equipment and Services Index, ETF. That is up 9.23% today. OIH, which I already talked about, that's the Oil Services ETF, that's up 8.59%. XOP, which is the Oil and Gas S&P, Spider S&P Oil and Gas Exploration and Production ETF, that's Xavier, Oscar, Peter, that's up 10.59%. So big rally in a lot of these oil stocks. The biggest pop I've seen in a long time. Maybe since oil was going from 110 to 120 and then up to 147 in 2006 and 2007. That's when the last time oil was really ripping. And the oil stocks were on fire. Oh, Hecla Mining surprisingly up a lot. I don't know why. I didn't see if there's any news, but Hecla Mining's up over 8% today. So just a very Halliburton, which was also in trouble. The stock chart did not look that good. I don't think they were necessarily in danger of bankruptcy, but the stock chart looked bad. Halliburton is up almost 11% today, at 10.95% up. Diamond Offshore Drilling, another quality company, up 13.26%. So there's been record days for oil. The question is, will it last, and how long will this rally last? Because there's still global macroeconomic factors. And shale oil, even though production is increasing for shale oil, it's not economic. Although now it's with a higher oil price, more of it's going to be economic. But when the oil prices were low, remember, Art Berman was on last month. And Art Berman said shale companies don't even break even unless they get $60 a barrel WTI. Yeah, but JNUG is leveraged. And Anthony says JNUG is up 9.1%, but JNUG is leveraged. So if some of the underlying gold miners go up 3 or 4%, JNUG goes up more. And if those gold miners go down, then JNUG goes down more. JNUG is leveraged. So be careful with that. Not financial advice, just my opinion. Be careful with the leverage in JNUG. I have a friend who made $10,000 trading JNUG very quickly, and he wasn't paying attention, and he gave it all back very quickly too. Yeah, the oil shorts got slaughtered, but what were the odds that there was actually going to be an attack and that it was going to knock out more than half of Saudi's oil production? I mean, was this predictable that it would happen? I'm not sure how predictable it was. This is why, not financial advice, just my opinion, this is why if you set up a trade in one direction, you can get burned. The smart people who know how to do this set up hedges. So the people who are short oil, just in case, they could have had hedged their shorts or hedged their puts. They could have had calls. Jeff says oil prices rising will cause demand destruction. Jeff, it depends. At this oil price now, no. We're not getting demand destruction yet. For oil to do major damage, it has to go above 90 or 100 and stay there for a while. And then that's when you're going to see people stop buying SUVs and pickup trucks, and that's going to hurt the U.S. car companies. So normally it's 90 or triple digit oil and has to stay there for a while. No, I didn't trade any options on the oil market. I didn't make any trades. So let's hope we don't start World War III with Trump and Iran. Yemen is saying that they didn't do it. Because initially, I think what Mike Pompeo was saying, it was Yemen, and that it was Iran who was backing them, and Yemen is denying that they did it. Yes. 500 pieces. Yes. Ford stopped making their smaller cars. Ford is only making pickup trucks and SUVs. And Ford just got their debt downgraded to junk debt, and things are not looking good for General Motors either. Even though General Motors stock for the last couple of years, David Einhorn was long General Motors and made a lot of profits on that. But now things are starting to catch up to General Motors because the United Auto Workers, which, if you're familiar with that story, corporate bond law was violated with General Motors. Obama gave the United Auto Workers, he defaulted when GM got bailed out for government motors. The bondholders were supposed to take ownership of the company, and pension funds. I think there was an Indiana state pension fund that had a large amount of General Motors bonds, and they were supposed to get paid back and get shares. They were supposed to get like pennies on the dollar for their bonds, and then also shares of the new General Motors after it was bailed out, and they didn't get that. Instead, the United Auto Workers got the equity stake, and Obama gave it to them, which violated hundreds over 150, 200 years of corporate bond law. So General Motors, the United Auto Workers own a large amount of shares in the company, and they have been saying recently that they made a lot of concessions to help General Motors become profitable, and now they have to renegotiate, and it's not looking good for General Motors. Yeah, the estimates, I've looked at some of the estimates. It's looking like there's at least a couple months to repair. So that the analogy I used for the shale oil companies is they've gotten a temporary reprieve from execution. The shale oil, things were looking very dire for the shale oil companies, and now they've bought themselves probably at least a couple quarters, maybe even more than 6 months. So the question then is, how long does it take Saudi Aramco to fix the damages? Because if this takes months, then the shale oil companies are going to benefit from higher oil prices. They're going to have more operating cash flow. Some of them may go from losing money to all of a sudden making money. And then if the shale oil companies are making money, they can either hedge their oil production and lock in a profit, or they can raise money. Although raising money is good for the company, good for management, good for the company surviving, good for management, it's not good for shareholders. Not necessarily good for shareholders, especially in the short term. I mean, if you're a long-term shareholder in some of these shale oil companies, other than EOG Resources, which I think is probably the best of the bunch, I don't know what you're doing. A lot of these shale oil companies are not very well run. They just dilute like crazy. They don't hedge at a higher oil price. They load the balance sheet up with debt and junk bonds. I would not, this is not financial advice, just my opinion, I would not be a long-term shareholder in any of these shale oil companies. Even Art Berman, who knows a lot about the oil industry, more than I do, and I was an oil analyst, and I've interviewed a lot of the oil experts in the archives on my channel, and I've read a lot of oil books over the years as well. And he doesn't even own any shale oil companies. I think he said he owns a small position in EOG. Did Ford bail out General Motors? I thought the U.S. government bailed out General Motors. I didn't think Ford bailed out General Motors. I own a Toyota. So China now is going to get a lot less oil. This is going to hurt China. So where does China get the oil? Because they're expecting oil from Saudi Arabia, from Aramco. Now where does China go to get the oil? That's a lot of oil that China has to figure out where to get. I hope we don't have a war. But countries have gone to war for far less. Crazy Ant says, if he remembers, higher oil prices hurt emerging markets the most, especially China. It depends, and it depends if the country is an oil producer and if they're subsidizing oil. So higher oil prices in Venezuela, for example, when Venezuela was actually functioning correctly with their oil industry, they were benefiting from a higher oil price, They had a lot more money for their government budget and for social programs. They were generating a lot of free cash flow. However, they were not reinvesting their oil profits back into their oil industry to upgrade their refineries, to lower costs for oil production. They were not doing any of that. So it would hurt China because China doesn't produce a lot of oil. Now, these emerging markets, if they're producing a lot of oil, this would benefit them. And then it just depends how much of their own oil production their local economies are consuming and whether or not the government is subsidizing their oil for the consumers there. And how much is the subsidy? No, China wants cheap oil. They don't need it. They don't need or want expensive oil. They want cheap oil. China did a very savvy long-term oil contract deal with Russia and with Brazil during the 2008 financial crisis. They locked in long-term agreements with both countries for many years of future oil production. They even paid above spot price, and everyone was laughing at them at the time. But they locked in a lot of... Oh, okay, it was a joke, Anthony. Okay. Yeah, so this right now with the higher oil prices, this hurts people who are short oil. Although 6 months from now or a year from now, things could change again. Yeah, Venezuela has been subsidizing. If you're not familiar, there's a free documentary. You can go watch it. They released it for free. It's on Real Vision's YouTube channel now. It came out, I want to say, earlier this year or late last year. It's on Venezuela, and it's about 35 minutes long. It used to be behind their paywall, and they show the Venezuelan oil industry in there and all the problems with the Venezuelan economy. So I highly recommend watching that documentary. I think it's really good. And it shows how subsidized the Venezuelan economy normally is and how the Venezuelan military was taking oil, entire trucks of oil, tankers are the ships, entire trucks of oil that carry the oil, and they were crossing the border with it and selling it at market price for a profit. So they were getting it almost for free. And then they were crossing the border to Colombia or another country and selling the oil at full market price. That's how bad the corruption was in Venezuela. What happens when the subsidies run dry? Well, you have the people already are starving there and their money's not worth very much. I don't know, man. More civil unrest. That would be my educated guess. Venezuela is a failed state. You can't blame the U.S. for all the problems there. I know there's some listeners that are not American that hate the American government and want to blame the American government for all the problems in Venezuela. It's more complicated than that. You cannot blame the U.S. for all the problems there. I have friends who grew up in Venezuela and escaped the country, and I've spoken to them at length. Go and listen to the interview I did with my friend Jose Nino earlier this year. He grew up in Venezuela and he escaped. Yes, I think in the short term the oil price will go higher because no one knows how long it will take. There's only estimates right now on how long it will take Saudi Aramco to get the oil production back online and the damages fixed. So as long as things are not fixed, the oil price is going to stay high as an incentive for other oil production to either not shut off or more oil production to come online. That would be my educated guess. Not financial advice, just my opinion. So we will have oil. I don't know if we're going to have $100 a barrel oil. We may have, let's see what we're at right now. I read it earlier. We're in the low 60s now for WTI, and Brent crude's at 68. I could see, oil going up easily for the next couple weeks or a month or two, up another $10 a barrel for the short term. And then that will keep the economics of a lot of marginal oil, that will keep the economics better. Whereas before the Saudi attack, the economics of a lot of marginal oil, especially shale, was really bad. You had WTI before this attack on the Saudi Aramco facilities. You had WTI struggling to stay at 54. And that was below the cost to produce shale economically. Arthur Berman, who studies this, said in an interview on my channel last month, He's been a petroleum geologist for over 30 years. He worked for the big oil companies. He's definitely an expert. And I've interviewed a lot of oil experts over the years in the archives on my channel. And he was saying how, like, shale, most of the shale companies, even EOG, well, EOG, I went and looked on EOG's investors presentation, and EOG recently had lowered costs, and they were generating free cash flow. EOG was projecting $300 million in free cash flow before the oil prices just spiked. So EOG's in very solid shape, I would say. I'm not a Redskins fan, Jesse. I have no allegiance to the Redskins. I'm a Washington Capitals fan. The Redskins are a disaster. Their owner is a mess. What is the relationship between oil price and inflation? Excellent question. So the higher oil price stays, the more that the higher oil prices go into the global supply chain, and that causes costs of other goods and services to go up. So that starts to spread throughout the global supply chain, and that gets passed on up all the levels of the supply chain. So from commodity production to all the different levels of manufacturing to consumer goods. Same thing with tariff increases. So just because China is devaluing their currency doesn't mean that the consumer is going to fully benefit from that. The consumer is still going to have to deal with the higher cost from the tariffs. It just means that China is going to try to help their own manufacturers by devaluing their currency, which doesn't really help their manufacturers, all of them, because then their food bill is going to go up, their rent's going to go up, the value of their currency is going to be declining. But that's the textbook for these neo-Keynesians and mercantilism. When in doubt, they devalue their currencies. So it starts to feed on itself. A higher oil price starts to create more inflationary expectations, starts to put higher costs into the global supply chain, etc., etc. Same thing with tariffs. Very similar. So a higher oil price is not only inflationary, it's also a tax. China does have some yuan oil futures contracts in yuan. The problem is when Russia sells them. The problem for China is when Russia sells them oil, Russia gets the yuan, and Russia doesn't want to hold the yuan. Russia dumps it immediately. And then that means that the People's Bank of China has to take their dollar reserves and go and buy up the currency on the offshore markets, currency markets. So they're still not out of the dollar system, and China's worried about the exchange rate of the yuan getting worse, so that's why they dumped the dollars to rebuy the yuan. And then the gold community, of course, gets fooled. The yuan is not doing a massive amount of global trade. I've seen estimates, someone said 4%, but Kyle Bass is saying 2%, so it's probably somewhere in between. Actually, Kyle Bass says it's less than 2%. Kyle Bass said that it's gone backwards. He said the total amount of RMB usage in global trade has gone from 2% about 6 or 7 years ago down to 1%. So the people, Anthony, excellent question. Well, excellent comment. He says there's no way the People's Bank of China can stay afloat. The People's Bank of China spends a lot of their reserves defending the dollar peg, the currency peg. A lot of people are not aware of this. Most people in the gold community don't understand this. I know because I've spoken with them and they don't understand any of this stuff. And so the Chinese government, the People's Bank of China, they spent around $1 trillion in their reserves starting in 2015. That's when their dollar shortage started to accelerate because they were spending a massive amount of their reserves defending the dollar peg back then. And that's when the dollar shortage accelerated. And as the dollar shortage accelerated, that's when China went to those derivatives, selling massive amounts of forward dollar swaps. It started to go crazy in 2015 and 2016 when their reserves dropped by $1 trillion. And I just saw another article a couple weeks ago that they were selling even more forward dollar swaps. Reuters reported it at the end of August. quoting multiple Chinese bankers. It's a realistic possibility that China could end up going the way of the Soviet Union. They've made a lot of mistakes the last 10 years. They do have a credit bubble for sure, and a real estate bubble, and they may have a currency crisis soon. Will the higher oil price make the Fed cut rates? The Fed will, it looks as of right now, the Fed's going to do one rate cut, so Trump's going to be pissed, Jonathan. Trump's going to be pissed at only one rate cut. He obviously wants more than that. Actually, surprisingly, I forgot to bring this up. Thanks for reminding me. The dollar index is surprisingly holding above 98, and the dollar index is almost at 99. It's at 98.66. So it's up pretty, it's up 0.4 today. So the market interpreted this as, let me look at the gold price here real quick. Let me see if money went. Yeah, gold's up a little bit. Gold's at 1505. Remember yesterday when I was doing the live stream, gold and silver were up. So gold is above 1500 again. Silver's up a lot today. Silver's up 35 cents according to this, up almost 2% at $17.92. So it looks like money went into gold, the physical gold and silver futures contracts too. Alex asks, aren't higher oil prices bad for miners? Yep, they are. But it depends how long oil prices stay high and if they go higher. Now, it's also, if gold prices are, if gold prices and silver prices are going up faster, higher and faster than on a relative basis than oil is, then gold miners' margins aren't going to feel nearly as bad. So it depends. Excellent question here from Dimitri in the super chat. The reason that China cannot do a gold standard, a gold-backed yuan, is once they did that, all the gold would leave the country, and China doesn't want any gold leaving the country. If you're the only country on a gold standard, you have all this capital inflow coming in, and then people start demanding their gold and trying to take it out of the country. And China has a lot of capital controls. China can't ditch the dollar as easily as people think. This is something the gold community doesn't fully understand. China's been trying for a long time to ditch the dollar, and things have not worked out as planned. It's not as simple as the gold community claims. If there's only one country on a gold standard, you will have all this capital inflow coming into the country and demanding the gold and trying to take the gold out of the country. Do you really think a country wants that? This is why gold worked in global trade when all the countries were in gold, and then a country ran a trade deficit, and then gold left the country, and then you fixed your trade deficit. This is a problem with only one country running a gold standard. So China won't go onto their gold standard, go back to yuan alone. They won't do it alone. They're risking all their gold. And then if they claim to have a gold back to yuan and they don't allow convertibility in exchange, then no one will trust their currency either. They'll be looked at as liars. The gold has to be assayed, Santana. The gold has to be tested. It has to be assayed and then recast to make sure that the gold, that's normally standard procedure. James Turk at Gold Money says all the gold that comes in, they do that standard. Thank you for the super chat, Alex, and you're welcome. Yeah, the gold community repeating that China can dump all their treasuries, that they're going to go back yuan, the petro yuan, all those things. It's not as easy for China to do all those things. Yeah, the U.S., Ricky says that's why the U.S. got off the international gold standard in 1971, because other countries want to be paid in gold. Well, the other countries had already been paid in gold. There was the story of Charles de Gaulle from Jacques Rueff, who was his financial advisor, who has a great book called Age of Inflation. It's a free PDF. And Roof sent a destroyer to pick up all the gold. I think it was in New York City. He sent a destroyer, a French destroyer, to pick up all the gold. And the U.S. was going to lose all their physical gold, and that's why they ended the gold standard. Because if you're the only country on a gold standard, and you have full convertibility, you can lose even if you're not running a even if you're not running a trade deficit or a big budget deficit or both. People can still demand your gold, and you're risking losing all your gold. The system worked better when a lot of other countries were on gold and silver, or just gold. As there's more and more negative yielding debt, it's going to benefit gold because gold doesn't have a yield, but then gold is not, you're not being charged. Yep, it's live 500 pieces. I saw your questions earlier. I do these live because I get preferential algorithm treatment. If you do the live stream, your channel grows faster than just doing only interviews or only short videos. The channel prefers mixing in live stream shows. The algorithm prefers that. So if you are not one of my almost 150 Patreon account contributors, or you're not one of my almost a dozen monthly PayPal contributors, or you don't tip me once in a while for my content, all you have to do is hit the like button and you're helping me out. A direct energy weapon in Saudi? I don't know. Lasers, railguns, I don't know. Alien weaponry. Did you hear the story about the Area 51 guys? They never got to Area 51. They got busted instead. Oh my god. And then I saw on Zero Hedge, I was looking through stories from a few days ago, and I saw some guy, he was going to get fired, and he brought an emotional support clown with him. Oh, snowflakes. %35 chance of no rate cut. Interesting. Well, it sounded like there was going to be one rate cut, but we'll see. I mean, that's the short term. In the long term scheme of things, it doesn't matter because the Fed is trapped, and I don't do short term trading like that. I didn't say there wasn't enough metal for a gold standard. It's a question of price. The problem is if only one country goes on a gold standard, then all the other citizens in all the other countries start exchanging into the other currency and trying to demand metal. Redeemability. And China has strict capital controls. And then also, they keep on making more stricter and stricter capital controls. I've been covering this on my channel last couple weeks, the new stricter capital controls. And then also China, it is illegal to take gold bullion out of the country. So you can't have a gold standard with convertibility for foreigners when it's illegal to take gold bullion out of the country. They'd have to change the laws. The clown made balloon animals while they were going over the details of a severance package. That's hilarious. Russia behind the attack. Interesting. Maybe. Who knows? Yeah, a gold standard is bad for speculators, but it protects the purchasing power of each dollar or euro or whatever currency you earn. So then the governments aren't stealing your purchasing power. Because your labor is supposed to be protected in the currency. At least that's how it was supposed to be in the past. There's a lot more above ground gold than silver. In the Earth's crust, it's different. That's because gold is almost all the gold that's used in industry, in dentist fillings, in jewelry. It's all recycled. Remember that gold plating that goes on like electronics? When I used to be into like the fancier head units for my cars, the fancier displays, some of the plugs that got plugged in there were 24 karat gold plated. All that gold that's above ground and used in industry, it's all recycled. Silver is more likely to end up in a landfill, and most of it's not recycled there because it's in trace amounts. However, if we get to $100 an ounce silver, triple digit silver, it will then become economic to start recycling all the silver. Yeah, Jesse's right. Silver gets thrown away. All silver is not recycled. Also, from what I hear at a lot of estate sales, there's a lot of people that go to estate sales now and they pick up silver at like garage sales or yard sales or estate sales. They pick, or people that forget to pay their storage locker fees. There's silver in there that people forget. Or people misprice the silver at like estate sales and yard sales. Pretty common from what I hear. And remember, at $100 an ounce silver, it starts to become economic to mine the ocean floor for silver then. Okay, that's enough of that troll. Wow, can't believe you wrote that. It's so bad I can't even say it out loud. It's more complicated than just an offshore dollar shortage. China has a dollar shortage. The emerging markets have enormous amounts of dollar-denominated debt. And people before were leaving emerging market stock markets and going into U.S. Treasuries. Although that trade, let me look at the 10-year yield before we wrap up here. Yeah, the 10-year yield's up a lot. It's at 1.84% now on the 10-year yield. And remember, on September 3rd, the yield was around 1.45. So we've had a big move. In my opinion, some people think it's a country dumping treasuries. We won't know unless a country actually announces it. We won't know for a while on the tick reports. But my educated guess is it's the Stanley Druckenmiller ZIRP, zero interest rate policy, long treasuries trade unwinding because of all the treasury debt that the U.S. Treasury has to sell for the rest of the year, and it's estimated at over $814 billion. That's the low estimate. And my guess, and why why the trade is unwinding so quick and why yields on the 10-year going up, is because that trade was really leveraged. So there was hedge funds leveraging that thing up maybe more than 10x. Then why is Trump tweeting about, Ron with the stuff that locked and loaded and all that stuff? He doesn't need to say that. Is he playing 6D chess? What's funny is if I say anything nice about Trump, if he does something I like, people get upset. If I criticize him, some other people get upset. You can't win. I should just stop talking about him. I should just stop talking about China. Because some people, no matter what China does, China is always better than the U.S. Even if China has a prison camp full of Muslims doing slave labor, which China does in Shangjing. Okay, well, that's it for the show. Thank you very much to my Patreon account contributors. I will put a bunch of links if you want to go more in depth on this story, including Robert Rapier's story link that he wrote over the weekend. He normally does not write articles over the weekend. My friend and former coworker, Robert Rapier, he's worked in the oil industry for 30 years now, about why he thinks if this Saudi problem is not fixed quickly, that we could have $100 barrel oil. I don't know if I agree with him, but we'll see. I think oil price will go higher, at least for the next couple weeks or a month or two, unless we see an announcement from the Saudis that the production is coming back online quicker than people expected. So I reserve the right to change my mind on that. We'll see. But for the time being, it looks like the oil stocks, or the oil price, and a lot of these oil stocks going down a lot is probably not going to happen. But that doesn't mean that in 6 months or a year from now, they could not end up going back lower. If I was running one of these oil companies, I would say, my God, this is a gift from God. This is blind luck. If I was a shale oil company and we were in trouble and all of a sudden the oil price went up, I would be looking to hedge my oil prices, lock in a profit to protect myself, and then also starting to raise capital to fix my balance sheet. But we'll see if some of these shale companies are actually successful at doing that. That's another story. Because look, the gold miners, the gold price is up a lot in US dollars from April to now. The gold price is still up a lot. It went from low 1200 up to 1500, and supposedly a lot, from what I hear from my contacts, a lot of primary gold miners can't raise a lot of capital yet. There's still enormous amounts of skepticism that the gold price rally will last. So there is a wall of worry for the bull market in gold and silver to continue. That is restarted. However, the miners are not able to raise a lot of capital yet to fix their balance sheets. So the miners do have more operating cash flow for now. Some miners went from either negative, they were not making really any money, or barely breaking even in April or May, for a long time before that too, to now making a halfway decent profit. Now we're making a pretty good profit, but if the oil price is going to keep rising, that could start to really affect margins. So that's something that needs to be watched. Okay guys, bye for now.